Today we had another exciting day of going absolutely nowhere as the market braces for big tech earnings. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was down 0.02%, so we went absolutely nowhere. But looking at the price action, we're still getting two consecutive closes over that critical resistance at 414, and price action is still above all the moving averages. So do not become one of those complacent bears that thinks the market is topping out. Wait for price action to prove it, because right now we have bullish price and a bullish trend. Keep in mind you manage your risk right here at SPY 411, which from today's close is not even 1% lower. So you have very little risk to stay bullish in a bull trend. It's only those trying to call a top that think SPY can't get into the 420s that are taking unnecessary risk, unless you want to manage your risk from this previous daily high at 417, which is completely fine, but on a break above that level, you need to be open to the possibility of SPY going to close the gap at 421. So this is really as simple as is a bull trend until it's not, and we're going to let the price action do all the talking. Above 414, we likely go to 417 and then 421, and our critical supports are 411 and 407. On the Nasdaq 100 triple Qs, we were down 0.05%, so we went absolutely nowhere, and yet again, price action is still above all the moving averages in a bull trend. Just like SPY, there's a good chance we're going higher to close the gap at 322 and hit that double bottom price target at 327. While we are above the critical support down here, which is the breakout zone between 311 and 313. Manage your risk from that critical support, because if we break below it, we're likely going to fill the gap at 308. It's a bull trend until it's not, so wait for price action to tell us it's not, and right now price action is still telling us it is. In the Dow Jones, we were down 0.24% today, with the price action still closing above all the moving averages, and now we have the 20 simple moving average crossing over the 50 EMA, so we officially have the full bull trend. The 5's above the 13, the 13's above the 20, the 20's above the 50, and the 50's above the 200, and they're all positively sloping. Manage your risk at critical support at 334, and the next upside price target is likely going to be 346. On the Russell 2000 IWM ETF, we were up 0.13% today, and we're still closing below this negatively sloping 50 EMA, so that's going to be strong resistance right around 179, and this gap close right around 181.28. The bull breakout isn't until we start closing above 181, so wait for confirmation. Or if you're long, you need to manage your risk down here right around 176 to about 173. On the ARKK ETF, we were down about 0.08% today, and we are still closing below the 200 daily moving average, and we're not getting bullish until we close above 40.5. Critical support remains 37 and 36. On the VIX, we were down 2.32% today as the VIX makes another daily lower low, and the VIX is now trading near 16, which are levels we typically do not see if we're in a bear market, so the VIX is continuing to tell us we're likely entering a bull market. On Bitcoin, we're currently down 4.2% as Bitcoin is pulling back to test the rising 20 daily moving average of support, which is our breakout zone above 28 to 29,000. This could be a retest before we go higher, or Bitcoin could be trying to roll over, but wait for confirmation that it's rolling over on the close below 28,000. If we bounce off the rising 20 daily moving average, our next upside price target will be 31,800. On Google stock, we were down 0.31% today, and Google did get the second day in a row closing down below the 20 daily moving average, so you need to be cautious here and manage your risk right around this support zone between 100 and 102. Below that, we likely come back down towards the breakout at 95, but we have upward gaps to fill at 106.84 and just below 110. So I do think there's a very good chance we are going to bounce and close those gaps before earnings. On Amazon stock, we were up 1.96% today, and Amazon had a very bullish candle with a bullish engulfing candle that also broke above the critical resistance at 104. So it does look like Amazon is getting ready to run to go hit our upside price targets at 107 and just below 109. Those are targets we will likely hit before earnings, and this is a bullish breakout with very little resistance above the breakout, so stay bullish as long as we're above 102 and 104. On Microsoft stock, we were up 0.03% today, and intraday we did bounce off of the rising 20 daily moving average, and we closed back over all the moving averages with the price action yet again, but we have not yet broken above the critical resistance at 290. We need to break above 290 to get to the price target at the gap fill at 296, and critical downside support remains 283, and then below that we're looking for gap fills at 281 and 276. On Nvidia stock, we're up 0.95% today as this stock continues to burn the bears trying to call a top, and we're now getting another confirmation of a breakout and close above 274. Above here, we likely hit the price target at 282.5, and if we start clearing above that, we're likely going straight to 300. On a break below 274, we do have a gap to fill at 270, and critical support remains this zone between 262 and 264. On Tesla stock, we were down 2.02% today as Tesla did gap down below this critical support at 183, and it did open a gap to fill above just above 183. So as you can tell, this is a loss of a critical support zone, which means we're likely going down to the next critical support zone at 173 and then 167. And if we lose all of that support, then we will be looking for that gap fill zone at 146. We're not getting bullish until we get back over 190, and it's as simple as that. On Apple stock, we were up 0.7% today as Apple has another bullish engulfing daily candle and very close to our price target at 169 and then the gap fill at 171. So this remains a bullish trend as long as Apple continues to close above 163 and the breakout zone at 165. On the financials, we are up 0.24% with the second day in a row back over the 50 EMA and likely pushing higher towards the 200 daily moving average next. The industrials were down 0.08% today with a continuation of building up this bull trend. We just simply need to break that resistance just above 101. The healthcare sector was up 0.31% today, failing to break back over 134, so that's going to remain resistance until we can close back above it, but we are developing a bull trend. The energy sector is down 0.35% today, but it's continuing to look bullish the longer we continue to close above this gap fill zone between 84 to 85. So jumping back over to the S&P 500, while these are very flat and boring days, nothing has changed in the bull trend, and the price action and the trend are still bullish. We have price action above all the positively sloping moving averages, and we still have a bull trend. So if you're waiting to get bearish on this market, you have no confirmation that the market is losing the bull trend. Be very cautious trying to call a top. There's a lot of bearish sentiment out there, and there's a lot of complacent bears who have been continuing to call for the VIX to spike and the market to roll over and die. However, the market continues to go higher. Follow the market, follow the price, and follow the trend, and you will have a much simpler time trading this market. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that will send you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.